On our almost daily dividends tracking journey so far, we have still not yet earned any dividends, and we're still down on the total investment overall. Because we've only just started, this was fully expected, as we'll come to later in the video. Now let's get into it. But first, hello and welcome to the Almost Daily Dividends. This is the channel that will be all about tracking the progress of the pie and answering your investing questions along the way. The content that we discuss is intended for information and educational purposes only, and should not be considered investment advice or investment recommendations. When investing, your capital is at risk, and you may get back less than invested. Past performance does not guarantee future results. We'll start off with portfolio performance. Portfolio performance, down about £6.50 in the first week, so that's not quite 1% down, relatively break even from the total amount invested. Now, when I took this other screenshot, the market was open, so prices were changing up and down, varying about all the time, which I guess goes to show the fickle nature of stock prices. To be honest, not sure I have much to say about the progress so far, as there hasn't been much progress so far. It's only the first week of having money in this pie after all. So that's the stock price so far, not super interesting really, as we've only just got started. Now let's move on to dividends and see if that's any better. Dividend payouts. Nothing paid out this week, or any in total so far. Wow, as it's so early, they're both the same thing at this point. It's nice to see the pie is still perfectly balanced, but no dividends yet, so this segment is not particularly interesting yet. Now, there are often people who get confused by the name of the pie at this point and think that dividends start immediately. I've mentioned this in the initial video, but just in case this is the first video you've watched in the series, then I should use this opportunity to explain how the dividends work. To understand why we haven't seen any cash yet, we need to look at the 3 key dates for every stock in this pie. First, the ex-dividend date. This is the most important one. You must buy the stock before this date to be on the list of people getting paid. If we bought our 50 stocks on Friday, but a company's ex-date was Thursday, we just missed that specific cycle and have to wait for the next one. Secondly, the record date. This usually happens 1 business day after the ex-date. It's simply the day the company looks at its books to see who officially owns the shares. Then third, the payment date. This is the day the company actually sends the money out. As I mentioned, this is often several weeks after the ex-dividend date. Then on top of that, even if we qualified for a dividend on our very first day, the cash has a journey to make through the clearing systems before it hits our Trading 212 account. We're currently still very early on, so we won't have qualified for any of the payments so far. And while we're on the topic of Trading 212, I asked Trading 212 if they could give me a unique code that you guys can simply type into the promo code section. When investing, your capital is at risk. Sponsored code, terms apply. So if you've opened a new account recently, or planning to open your account soon, then here it is, DivExP or DIVEXP, short for the dividend experiment. You have 10 days from opening your account to type this in and receive free fractional shares worth up to £100. I also get something as this is my custom code, so this helps you support the channel too. Now let's move on to the more advanced analysis of the pie so far. Further analysis. For this part of the weekly video, we'll look to Simply Wall Street to do a bit of a deeper dive. The overall portfolio snowflake is looking good, skewing more towards health, value and dividend compared to future. But that's really what you'd expect from a dividend portfolio. Future dividends. Each week I plan to check in on the dividend projection provided by Simply Wall Street to see how it's increasing over time as we deposit more into it, or hopefully increasing over time anyway. Last week when we first started, it provided us with a reading of a projected £23.63 in dividends, so a yield of 2.9 or maybe a little under 3%, which is pretty much in line with the data on the dividend dashboard. This is basically saying that with the amount invested now and without adding payments over the course of the next year from today, would be estimated to equal £23.63 in payments. This week, after the increase in the total amount deposited, our future income projections have grown too. It's now at £26.88 projected payout across a year, or an average monthly of £2.24. When it comes to monthly, it's important to remember that the number shown is a payment on average. So some months will be higher than others, rather than it being a set defined amount that you get every month. This future dividend projection is super useful information to know, as people often get wild expectations in terms of how much dividends they'll get early on in their dividend investing career. Either they dismiss it completely, as they can't imagine the exponential compounding growth over time as we add more, and it reinvests on itself, or they way overestimate how much they'll be getting. Any news updates? Again, only just started, so not going to be much news since we started, but let's take a look at some of the news stories happening on some of the stocks. On the 13th of March, Norman Edwards sold around 500,000 shares on market at roughly $48.18 per share. This transaction amounted to 1.2% of their direct individual holding at the time of the trade. Insider trading can possibly give hints as to how insiders feel about the potential of a company, but buys are often more indicative of personal opinion than sales, especially at a low percentage of overall holding. There are also director or management sales at General Dynamics, Microsoft, and CF Industries. These seem like big numbers to us regular hoi polloi, but could just be pocket change to these rich folks, so it's important to check the extent of their holding. I would say the CF Industries sale is more interesting at 25% of the director's holding, but again there could be many reasons for the sale, and the stock has had an impressive run up recently. For Nucor, analysts have nudged their price target on Nucor higher to about $187 per share, reflecting updated views on its modernisation spend, the mix shift towards higher value products, and expectations that the company's multi-year organic growth plans could support a stronger through-cycle profitability profile. Now in the videos, I'll just pick a few of the more interesting updates since the last video. As there are 50 stocks, there will be many if you want to read more details on any of these. Welcome to use the link straight to the portfolio in the description. The link to that portfolio means that you can use it at any time to see how the portfolio or any of the stocks in it are doing. You should be able to use it to see the details talked about in the videos without even having to sign up. You can also get a free trial and 30% off all Simply Wall Street subscription plans if you wanted to have it personalised to your own portfolio, using that same link in the description and pinned comment. On top of that, if you do decide to sign up, it's a referral link, so that helps support the channel too. Q&A. This is the part of the video where the questions will go in future. Haven't really promoted the series as I wanted to make sure everything was working smoothly before I did that. So effectively this is the first video that people are likely to watch and therefore have questions for, so hopefully we get some for next week. Leave them in the comments below if you have any. If you want your question to be answered, then you'd have to comment on the YouTube video the most recent episode. So as you're watching this right now, if it's the most recent one available, then comment your questions below and I'll answer in the video for next week. It can get super difficult to find and keep up with questions and comments on previous videos. Basically, if you comment on the most recent video and it needs an answer longer than a simple comment reply, I'll try to answer it in an upcoming video. I will say that if there are somehow hundreds of questions, then I might only pick a few of them, but I will try my best. There are some rules for questions I set out in the very first intro video, nothing too strict, I just want to avoid the time wasting type questions, or any questions that are specifically requesting personalised financial advice, which I'm obviously unable to give. Other than that, pie or general investing questions are pretty much fair game even if they are only tangentially related to the series. You're welcome to give non-question type feedback on the series too, if there's some aspect of it you want to see or more details on another part of it. The idea is for new investors to get a good idea of how the almost daily dividend pie, and by extension investing in general, works, but trying to make it as interesting and fun as possible along the way. See you on the next weekly episode. Hey, thanks for watching this recent episode in the Almost Daily Dividends tracking series all the way through. Just a couple of things before you go. First is, as this is a freshly set up channel, if you want to stay up to date with the new episodes, the best thing to do is to subscribe and turn on the notifications. If you're a pie copier and want to get all the details of when I make changes to the pie and the reasons for the changes, then the best place to do that is sign up to the mailing list. I'll also give you a PDF guide to my 10 dividend investing commandments, or the rules that I use to help choose dividend paying companies to buy. Finally, if you want to find out more details about the pie, then check out the links in the description for more info. See you in the next one.